So you've been investing in your 401k, you're funding your IRA, and you may even have individual stocks. But is your portfolio balanced, and what does that even mean? Well, today I'm going to be showing you an easy way to do a quick checkup on your investment account. Hi everyone, this is Camilla, the Focused Spender, and welcome to my channel. On my channel, I teach you how to get out of debt, save more money, and invest so that you can build wealth and leave a lasting legacy. So today I'm going to be talking to you all about balancing your portfolio. I'm going to tell you what it means, things to consider when building a balanced portfolio, and how to give yourself a checkup using the Personal Capital online investment planning tool. So let's go ahead and get started. A balanced investment strategy is a way of combining assets in a portfolio that aims to balance risk and return. Typically, balanced portfolios are divided between stocks and bonds, either equally or tilted to 60% stocks and 40% bonds. But realistically, that's going to be changing whether you're old, whether you're young, whether you're conservative, whether you're aggressive. You don't have to stick with that 60-40% split. So when you're thinking about building your portfolio and you're trying to be balanced, there are 5 things you need to consider. First, you need to start with your needs and your goals. So basically, how much money are you going to need and when are you going to need it by? So like if you're thinking about, I'm going to retire in the next 25 years and I want to have $2 million when I retire, that is going to be your goal, and you're going to be trying to build your portfolio centered around reaching that goal. So the next thing you want to do is think about your risk tolerance. Whether you are a conservative person and you really cannot stand losing even $1, and then that means your portfolio is going to be all bonds, no stocks, or if you are someone that's aggressive and doesn't mind losing a little money when they know the payout is going to be so much greater. So you know what they say, scared money don't make money. So basically for someone like that, you're going to want that higher weight of 90% stocks, 10% bonds, or 80% stocks, 20% bonds. So the next thing you're going to do is determine your asset allocation. And I'm obviously not going to tell you all the assets there are, but the 3 main types are stocks, bonds, and cash. Stocks being the most aggressive, bonds being really conservative, but less conservative as cash, cash just being completely conservative. That means you're just putting your money in the savings account and nothing's going to happen. Maybe you're going to get 1% interest if you're lucky. So the next thing you're going to want to do is think about how you're going to diversify your portfolio. And that is honestly one of the most important things you can do. You have to determine within your stocks, and when I say stocks, I also mean ETFs and index funds. All of that contributes to building a balanced portfolio and a diversified portfolio. But you're going to want to make sure that the companies that you're investing in are mixed between domestic, between foreign. You want large cap companies, you want mid cap companies. You want to make sure that they are across various industries. You don't want to have all your money in tech, or all your money in healthcare, or all your money in consumer spending. You want to make sure that it's split up between different companies. So just in case there is a bubble burst, you are not going to lose all your money because your money is spread out between companies, it's spread out between industries, it's spread out between the US and overseas, things to that nature. And finally, you're going to have to rebalance your portfolio periodically. Like, I am definitely a set it and forget it girl, but even with my set it and forget itness, I still have to go in and just give myself periodic checkups. Do I have too much in cash? Do I have too much in this industry over here? Where do I need to change? What do I need to buy more of? Where do I need to sell so that I can have more money in another industry? Am I just saving too much? You have to look at all those things periodically. You can do it once a quarter, once every 6 months, or once a year. But every so often, you're going to have to go in and see what your accounts are doing. And that's where Personal Capital comes in. So I've been using Personal Capital for several years now. And I've done a few videos where I've talked about the app. But Personal Capital is basically like it's like mint.com, but it's more centered around investing. So you can track your expenses, you can track your budget, you can link all of your accounts to see your net worth, which I totally love. But you can also look at your investments and see how they are doing. In Personal Capital, they have a feature, which I'm going to show you in a second, where they show you your target allocation versus your current allocation so that you can get a better sense of like where your money is going and how you need to fix it so that it can perform the way you need it to perform. So let's go ahead and go right into personal capital so you can see exactly what I'm talking about. Okay, so when you go into the personal capital app, you're going to go to the planning section and you're going to go to investment checkup. And in the investment checkup, you're going to see your current allocation. So this is my current allocation and this is my target allocation. So as you can see, I'm slightly overweight in cash, slightly underweight in international bonds. I'm pretty much good with US bonds. I'm pretty okay, but a little bit overweight in international stocks. I'm really good with US stocks, and I'm really low in alternatives, and I have some unclassified money. And so if you go down, it gives you more information about different allocations. It talks about your historical performance. So what I like about this is that looking at my target allocation and my current allocation, my money honestly is doing well because it's pretty much on par with each other. It's current allocation is in blue, target allocation is in green. As you can see, it completely overlaps. And it gives you some ideas of future projections. So all things being equal, in a good market, my current allocation will slightly outperform my target allocation. And in a bad market, the worst outcome, my current allocation will perform slightly lower than my target allocation. So one thing that's really helpful is that you can click on all accounts and you're going to have a drop down menu, and that menu is going to show you your different accounts. And so you can select the accounts to see how each account is doing in terms of its allocation. So I'm clicking on my Betterment account and I can see how that is going in terms of my overall current allocation versus the target allocation. So the next section we have here is the stocks section. So if you click on that, it can tell you more information about your individual stocks. So large cap stocks represent 81.78% of my US equity portfolio, and it can tell me my largest individual stocks, which is UAL, United Airlines, and that's only 0.44% of my portfolio. And so as you can see here, these are the individual stocks that I own, which is a really small percent of my overall portfolio because for the most part, I just have ETFs and index funds and mutual funds. But then also down here, it shows my current weighting over different industries. So for me, 14% of my overall portfolio is in consumer cyclical. So like, you know, Target, Home Depot, things of that nature. So I can see where I'm underweight and where I should be buying more stocks or ETFs in what industries. It also gives you information about your large cap and small cap. As you can see, I'm most overweight in large cap and most underweight in small cap growth. So that's personal capital, and there's so many more things you can do with the app. You didn't see on the left hand side, but it gives you all of your information on your personal accounts. It shows you your net worth at any given time so that you really can keep track of how your money is doing. If you want to give personal capital a try, I'm going to make sure I leave a link in the description box below, and you'll get $20 just for trying out the app. And I'm telling you right now, you're gonna love it. I've been using it for years, and honestly, when I started using it, the company reached out to me, and this was at least 4 years ago, and I thought, this is not legit, but I tried it and I have never stopped using it, and I recommend it to everyone because you can use it for free. I hope you enjoyed this video, and I will see you next time. Thanks, bye-bye.